Hey, good morning, good afternoon, or good evening, wherever you're joining us from. And a very warm welcome again to Westwood's webinar on the key wells to watch for 2024. Today's presentation will provide a brief review of high-impact activity and performance in 2023, as well as the key successes and failures of last year. We will then look to 2024 and deep dive into some of the key wells to watch this year. The featured key wells are all high-impact wells, as defined on the bottom left of the screen. These are significant wells which have the potential to open new basins, new plays, or test high-value single prospects in proven plays. On the call today, we have our team of UK-based regionally focused analysts who will take us on a tour of the key wells around the world. We are also joined by Westwood's Head of Global E&A, Graham Bagley, and I am Shireen Nairn, the Global E&A Business Development and Account Manager. This session is being recorded and will be available on the Wildcat platform after the session. Please feel free to leave your questions and comments in the chat, and we will have a Q&A at the end of the session. I will now hand over to Andrew Jackson. Thank you.
Thank you, Shireen, and welcome to everyone on the call today. So 2023 was a fairly unremarkable year, actually, for high-impact exploration, and we saw less drilling, smaller discoveries, and lower success rates. So the year ended with 64 high-impact wells drilled, and this was down from 82 wells in 2022, and actually the lowest number of wells that Westwood has recorded. And all of this is in spite of an oil price of over $100 per barrel in 2022, which would normally have translated into higher exploration spending the following year. So it seems like the strong correlation between high-impact drilling and the previous year's oil price that's held since about 2010 appears now to have potentially finally broken. So a slowdown in drilling in South America in particular, which we'll see on one of the later figures, was a major driver behind this fall in activity. So looking at discovered resource, there were 13 commercial discoveries last year, delivering 1.2 billion barrels of oil and 11 TCF of gas, and this equated to around 3 billion barrels of oil equivalent in total. So fairly disappointing when compared to the 5.5 billion barrels of oil and 15 TCF of gas discovered in 2022. And we've seen that over the last 5 years, there has been a continual decline in resource from around 17 billion barrels of oil equivalent in 2019. The commercial success rate fell from 35% in 2022 to just 20% in 2023. Frontier commercial success rate, although not shown here, fell back to historical baseline of between 5 and 10% after quite a record-breaking year in 2022, where it was at a high of 25%. And looking at the mean discovery sizes, this fell from 276 MMBOE in 2022 to around 234 in 2023, whilst the median discovery size remains steady at about 167 MMBOE. The fall in the mean is much more impacted by fewer large discoveries, the likes of which we've seen in previous years, such as those in Russia. So to summarise, not really a stellar year for high-impact exploration, with less drilling, smaller discoveries, and lower success rates. So if we move on now, we didn't see the potentially transformational discoveries that we saw in the Orange Basin in 2022, but there were still big gas discoveries made last year, and these were in Indonesia and Egypt, and we also saw further success in the emerging plays of Namibia. So there were 13 potentially commercial discoveries located in 12 basins around the world, and it is important to emphasise that these are currently considered potentially commercial, with appraisal drilling still required to confirm the commerciality of some of these discoveries. So the largest of the year was Eni's Geng North in Indonesia, estimated by Westwood to contain around 740 MMBOE of recoverable gas condensate. And this would actually make it the largest discovery in Indonesia for about 20 years. So this well encountered 50 meters of 50-meter gas column in high-quality Miocene sandstone reservoirs, and this discovery is currently being evaluated for a fast-track development. Also in the region, there were gas discoveries for Mubadala at Layaran well in Indonesia, and for PTTEP at the Babadon well in Malaysia. The second largest discovery of the year was the Chevron-operated Nargis well in the offshore Nile Delta. Eni was also a participant in this discovery, having farmed in during the drilling. So Nargis encountered 61 meters of net gas pay in Miocene and Oligocene sandstones. We haven't had official resource estimates for this discovery. However, unconfirmed reports prior to the discovery announcement suggest this discovery to be around 3.5 TCF of recoverable gas. In Namibia, Shell made a light oil discovery in assumed Aptian Albion turbidites up-dip from the Venus discovery. It's also understood that this well made a discovery in shallower targets, potentially Santonian or Cenomanian. And this discovery was appraised by the Jonker 1A well, northwestern down dip of the discovery, and a second appraisal well, Jonker 2A, has just completed in the last few days. And we don't have results for either of these appraisal wells just yet. In South America, there were significant discoveries made in the Starbrook license at Fangtooth Southeast and Lancetfish, and these added an estimated combined resource of around 580 million barrels. And these discoveries could underpin a potential new development in the Fangtooth area. In Colombia, Shell made a gas discovery at the Glaucus well, close to the undeveloped Gorgon, Purple Angel, and Kronos discoveries, and adding further resource to support a potential future gas development. In the US GOM, Cosmos made an oil discovery in the lower Paleocene Wilcox play at the Tiberius well, and Cosmos has reported that the well had de-risked a third of the pre-drill target of 135 MMBOE. Northwest Europe saw the only frontier discovery of the year, and this was at Shell's Pensacola well. We also saw a large discovery in the north, in the Norwegian North Sea. This was at Wellesley's Carmen well, and Wellesley is estimated between 60 and 100 MMBOE here. Finally, there were also a couple of onshore high-impact discoveries. This was one in Turkey and also one in eastern Siberia. So moving on now and quickly looking at the failures. So clearly a very busy map of unsuccessful wells in 2023, and we'll just touch on some key failures here. And of course, we have detailed analyses of all of these wells, which you can find on Wildcat and in our January hits and misses report. So three of the most significant failures were the Frontier Basin tests. These included BP's Ephesus well in Canada, as well as Eni's Raya and Cinnamon wells in Mozambique and Morocco, respectively. So the Ephesus well in the Orphan Basin was the largest offshore prospect drilled last year at between 4 and 5 billion barrels of oil equivalent, and its failure would likely have downgraded the regional prospectivity in this part of the basin. Further drilling is expected in the basin this year, but targeting the Jurassic rather than the Eocene. Eni's Raya well was the latest well attempting to unlock an oil play offshore East Africa, and the lack of announcement indicates an unsuccessful result, which will likely dampen the future appetite for exploration in the Angoche Basin. Eni's Cinnamon well in Morocco adds to a growing list of failures in the Tar Fire Basin, and the exploration potential here also looks to have been downgraded. So there were significant play extension failures last year for Total at Nara in Namibia, and also the Sidon South well in Lebanon. So Nara was attempting to extend the large Venus discovery into the adjacent outboard block, and had it have been successful, it could have significantly bolstered the resources towards the planned development. Its failure looks to have downgraded the reservoir potential in the outboard block, but hasn't derailed the Venus development. Sidon South in Lebanon made only a minor gas discovery, and in doing so failed to extend the commercial extent of the Tamar Miocene sandstone play northwards into Lebanon. And there are still question marks over the extent of this play as you go northwards. In Brazil, 2 further gas discoveries were made in the outboard of the Campos Basin, trying to extend the prolific pre-salt play. So both Sucarana and Ubeia appear to have made non-commercial gas discoveries. And finally, it's worth noting that there were numerous failures in Mexico, predominantly for the IOCs in the offshore Campeche Basin. These included wells for Shell, Petronas, Eni, and Murphy. And these failures add to a growing list of unsuccessful commitment wells that we've seen in recent years and are now resulting in some IOCs exiting their licenses. So what's the picture looking like for 2024? So if we just skip ahead to the next slide, we've seen already this year 11 high impact wells are completed, a further 18 wells are drilling, 25 wells are considered firm and have a rig contract in place, and a further 15 wells are probable with recent plans published by the operators. So we're therefore expecting around 60 to 70 high impact wells to complete this year. So in terms of the regions, Africa is expected to lead the way, accounting for around 30% of global high impact drilling this year. And the region has seen a steady increase in drilling since 2020, with activity largely driven by the emerging Orange Basin since 2022. South America is expected to see an uptick in drilling after a relatively quiet 2023, and we're expecting around 17 wells that could be drilled in the region this year. North America will see the inverse, and activity is expected to fall from around 19 wells in 2023 to potentially around 14 or 15 this year. And this fall is largely due to fewer planned wells offshore Mexico as the bid round drill out program nears its completion. So looking at who is going to be doing the high impact drilling this year, and again, it will be dominated by the super majors, who are expected to account for 4 of the top 5 most active explorers this year. So Shell was the second most active explorer in 2023 with 12 gross high impact wells behind Qatar Energy, who drilled 13. And again, Shell are expected to be up there and actually at the top, leading the way this year with potentially around 12 high impact wells. Moving up the chart this year is BP after 2 high impact wells in 2023. And we could be expecting them to drill around 8 wells this year, and they currently have a few wells drilling at the moment. So the 2024 programme, if we just skip ahead to the next slide, is shown here on the map. And clearly there's still a big appetite for frontier exploration, as shown by the number of pink dots here on the map. And there is quite an exciting inventory of prospects that could be drilled throughout the course of this year. So today we'll focus on a small selection of some of the most impactful wells, which are highlighted here on the map. So key wells we'll focus on today include frontier basin tests such as Argerich in Argentina and Arcturus in Angola, as well as large prospects in proven plays such as Mopane 2X in Namibia and Ochcan in Mexico. So let's start now by looking at our first region, and that will be South America. So after an unusually quiet year in 2023 with just 9 high impact wells drilled, this year is expected to see a return to the levels of activity that we saw in 2019 to 2021. And as I mentioned, potentially around 17 wells expected. So the high impact exploration hotspots in recent years have of course been the prolific basins of Guyana and Suriname, and also the Campos and Santos basins in Brazil. And these will continue to host the lion's share of the drilling this year. So the Starbrook JV in Guyana is prioritizing exploration and appraisal of its significant gas resource in the southeast part of the block. And it's also looking to drill a couple of high-risk northwesterly play extensions, hunting for new hub-scale opportunities. And these include the Redmouth and Trumpetfish wells. In neighbouring Suriname, Petronas is exploring for further resource to support a first potential development on Block 52. And there's currently an exploration well drilling as we speak, and an appraisal well is planned on the 2020 Sloanair gas discovery. In Brazil, the last few remaining commitment wells in the outboard pre-salt Campos are expected to be drilled this year after what's been largely a disappointing campaign, resulting in mostly non-commercial gas discoveries. The focus will switch to the inboard, and BP's Pau Brazil well is a key well for the company coming up in the next few months here. So this will be testing a large pre-salt prospect close to the CO2-rich Jupiter field. Activity along Brazil's equatorial margin is expected to increase as Petrobras looks to drill around 16 wells here over the next 4 years. And the Anhanga well is a key well to watch, currently drilling in the Potiguar Basin. So two of the most significant wells in the region this year are both frontier basin tests, and these are the two we're going to talk about today in more detail. So we have in the north, Oxy's Komodo well offshore Colombia, and in the south, Equinor's Argerish well in northern Argentina. So if we jump ahead now to our first key well to watch, and this well in around 3,900 meters water depth, the Komodo well offshore Colombia could actually be the deepest water exploration well ever drilled, and actually even deeper than Total's Anjaba well in Angola, which was drilled in 2021. So Komodo is going to be operated by Oxy, who partner with Ecopetrol, and this well is located about 150 kilometers north of the coast of Colombia. So the prospect is located in Block Col 1, which is one of 4 large licenses operated by the JV. And these blocks lie outboard of the active accretionary prism, or so-called South Caribbean deformation belt, which you can see shown on the map by the black dashed line. So Komodo is very likely to be targeting Pliocene and or Upper Miocene deepwater turbidite sandstones, and these are potentially in a broad, low relief four-way structural trap on the frontal part of the deformation belt, and potentially quite similar to the structure shown on the seismic section highlighted in figure 12b. So just for reference, this seismic line here is about 100 kilometers east of the Komodo well, but nevertheless still provides quite a good analog for the structural setting here. So the Columbia Basin is frontier and it hasn't seen any exploration drilling to date. And there are, of course, significant risks on all aspects of the petroleum system, not least the reservoir presence and quality, given that this is a very distal setting, more than 100 kilometers from the core of the Magdalena Delta. Dry gas has been the dominant phase discovered to date offshore Colombia, but there is evidence from piston cores to support the existence of thermogenic oil generation, and the locations of these piston cores are shown here on the map by the red stars. There is evidence of a potential Cretaceous source rock in the ultra-deep water, and this comes from 3 DSDP wells drilled in the early 70s and shown by the yellow dots on the map. These DSDPs were all drilled on bathymetric highs to the northeast of Komodo and recovered core from late Turonian to Santonian, and these cores demonstrated organic rich layers with TOCs of up to 11%. There has been subsequent rock eval studies on these samples, and these have determined these intervals to show good to excellent potential for hydrocarbon generation. So bearing in mind that these samples were recovered from shallow burial depths, then it holds that a postulated Cretaceous source rock is likely to have attained much higher levels of maturity in the deep central parts of the basin. So there are widespread DHIs identified on regional seismic data across the basin, and these support the presence of hydrocarbons. And we can see a textbook example of the structure here on the seismic line, with cross-cutting reflectors, flat spots, and bright amplitudes conformable with structure. Further evidence of an active source system is supported by the widespread occurrence of gas chimneys, highlighted in pink on the section there, and these seem to emanate from deep in the Cretaceous section. So kind of the big question really is, are we going to be dealing with an oil play here, or is it going to be gas? And for that, we'll have to wait until the second half of the year to get results from this well. So Komodo is a large prospect. It has a pre-drill resource of around 345 MMBOE, according to Ecopetrol. But given the extreme water depth that we're dealing with here, it's unlikely that Komodo would be commercial as a standalone, even if it were to come in at pre-drill volume. Proving good quality reservoirs in this distal setting would be a major positive, and a discovery could unlock significant running room with more than 40 large prospects mapped across the JV's acreage. The larger Monitor prospect, which the JV has mapped, estimated at around 1 billion barrels of recoverable resource, could potentially be the next target if Komodo is successful. On the flip side, failure to identify any hydrocarbons in good quality reservoirs would probably write off this basin entirely. So we'll be watching this well in the second half of this coming year. So our second key well to watch in the region, this is another frontier basin test, and this is the Argentina basin offshore northern Argentina. And this is the Argrish well operated by Equinor, partnering with Shell and state company YPF. And this will be drilled in the large Can 100 license, about 240 kilometers off the coast in around 1,500 meters of water depth. Now, this, of course, is a very interesting well, not least because it's on the direct conjugate margin to the Orange Basin, where all of the recent success has been, but it's also the first well to be drilled in more than 500 meters water depth in Argentina. So this is testing a very different concept to what we've seen in the Orange Basin, and rather than deep water turbidite in stratigraphic traps like at Venus and Graph, the primary targets at Argrish are understood to be shallow marine Cretaceous sandstones in a three-way fault-bound closure over a large outer continental basement high. So the Colorado High, which will be drilled by Argrish, essentially separates the Rift Basin in the west from the younger Cretaceous passive margin basin in the east. And we've seen about 18 exploration wells drilled in the Colorado Rift Basin, and there have been hints of an active petroleum system, but no commercial discoveries made, and no wells yet drilled on the high itself. So Equinor's model is that this high acts as a mega-regional focus for hydrocarbons and potentially drains a very extensive but unproven outboard Aptian kitchen. There is also charge possible from an inboard kitchen within the Colorado Basin itself. So Aptian source rock presence and maturity are really the key risks for this play, and evidence to support the presence of an Aptian source rock is largely indirect and based on tectonic reconstruction, seismic character, and AVO modeling. So in the passive margin setting east of Argrish, the overburden thickness could be less than 2 kilometers, and this, of course, poses risks for source rock maturity. If we do get a mature source rock present here, then another key risk is charge access, with potentially significant lateral migration required to charge the prospect. So Argrish is a large prospect. Equinor are estimating over 1 billion barrels of prospective resource, and the greater closure could measure over 2,000 square kilometers. So in a success case, potentially significant appraisal would be required to fully confirm resource. If successful, then Equinor are in a good position to capitalize on success. They have an operated position in blocks 108 and 114. So block 108 is actually outboard of Argrish on the flank of the outer high and in the more distal domain overlying SDRs. And this could be an opportunity to test deep water equivalent reservoirs such as those seen in Namibia. So we're expecting Argrish to spud sometime around April, but the JV has a spud window until June this year. So hopefully we'll get some results on this well in the second half of the year. So I'm going to pass over now to Brian Gill to talk through Africa.
Okay, thanks, Andrew. So Africa is in the midst of a resurgence in high impact drilling, following a low in 2020 and 2021. And you can see from the chart on the left there that we've seen drilling activity steadily increase year on year ever since. And we've identified 19 wells that could complete by the end of 2024. So looking at the discovered resource, you can see that 2019 stands out due to a couple large gas discoveries in the MSGBC basin. Moving ahead into 2022, we saw the highest discovered oil resource in Africa with the large discoveries that were made in the Orange Basin offshore Namibia. However, into 2023, we saw a drop in discovered resource down to around 900 million barrels equivalent. In 2024, the potential resource could nearly match that discovered in 2022. So in our key wells to watch report, we've highlighted 5 wells in Africa this year. We should finally see Total Energies drill the Niambu well offshore Congo, which is expected to target the lower Cretaceous pre-salt play, which is typically targeted further north in the Gabon Basin. And we may also see Cosmos drill Akeng Deep in Equatorial Guinea, which is a high-impact ILX well targeting the Frontier Albion play near to the Seba and Akume oil fields. And if it's successful, it could offer significant follow-on potential. Looking north into the Eastern Med, ExxonMobil is planning on drilling the Nefertari well in the Frontier Herodotus Basin, although it sounds now like the well may be pushed in 2025. And this well is assumed to be targeting the extension of the Western Desert Cretaceous place. Before this presentation, we've decided to focus on two wells, which are Arcturus and Mopani 2X. So the first well we'll highlight is Arcturus, which is planned by ExxonMobil in the Frontier Namib Basin offshore Angola. So back in 2017 and 2018, Exxon acquired a significant acreage position on the Brazilian Santos and Campos basins, and its entry into the Namib Basin appears to have been an effort to also capture a position on the conjugate margin. You can see from the map here, and the blocks that are highlighted in red, that Exxon's acquired a sizable acreage position with over 50,000 square kilometers of continuous acreage on both sides of the border. Now, the Namib Basin is a very frontier basin, so there's only 2 wells drilled in the basin so far, which are both on the Namibia side. So these are Kunane, which was drilled in 2008. This well targeted Aptian and Albian carbonates and encountered gas shows in poor quality volcanic clastic reservoirs that were interpreted to have been altered by nearby igneous activity. The second well, Tapir South, was drilled by Chariot in 2012, and it did encounter some good quality Cretaceous sandstone and carbonate reservoirs, but it failed to encounter any hydrocarbons. So Chariot interpreted a Cenomanian Turonian source rock, which came in shallower than prognosed and was therefore immature, whereas deeper source rocks were either not present or over-mature. And it's also worth mentioning that Tapir South also encountered more volcanics than predicted. So for Arcturus, no prospect details have been presented by the JV, but we do know that it's going to be on the Angola side and that it's understood to be in Block 30, which is the inboard block just across the border. The Namib Basin is a southern extension of the Kwanza and Benguela basins, and you can see from the gravity data on the map and the crustal boundaries that the margin narrows considerably to the south, and the width of the margin measures only about 100 kilometers from the shoreline to the boundary of oceanic crust. There have been multiple plays proposed in the basin, so Sinriff Lower Cretaceous, fluvial lacustrine sandstones and carbonates. There's the sag-faced lacustrine carbonates, similar to those in the Kwanza Basin and on the conjugate margin. Also Albian carbonates, as well as post-riff Upper Cretaceous to tertiary deepwater turbidites. Reservoir quality may be a key risk due to the presence of the numerous volcanics that have been mapped across the basin, and also the evidence of volcanics that were present in both wells. You can see on the map here, the pink boundary that you can see is the Aptian salt, which provides the seal for the pre-salt play for the north and the Kwanza Basin. And you can see there that it does extend into the northern Namib Basin, but doesn't appear to extend as far south as the Exxon block. So if they are targeting this lacustrine carbonate play, that play might rely on a different seal. Source presence and effectiveness is also very uncertain. So there has been multiple source rocks proposed in the Sinrift and the Sag sections. In Kunane did encounter gas shows, suggesting that a thermally mature source rock is present in the basin. However, its ability to generate commercial quantities of hydrocarbons is still uncertain. And any post-rift source rocks do carry maturity risk as evidenced by Tapir South. And to top this off, you also may have a CO2 risk due to some of the well results that we've seen in the Benguela Basin to the north, where very high concentrations of CO2 appear to be present in areas of highly attenuated continental or transitional crust. So I think I probably just about highlighted all of the elements of the petroleum system as key uncertainties or risks, but this is often the nature of frontier basin exploration. So if Exxon is successful, it's already captured a significant portion of the acreage in the basin. They'll likely be looking for oil here, and a discovery would need to be large, probably in the 300 million barrel plus range to justify a standalone development with no nearby infrastructure. A success would also be encouraging for other players in the basin, such as Total Energies, who holds the adjacent Block 29 to the north, and also Azul Energy in Block 28, who may also drill a well in the basin in 2024. However, a failure could be bad news for the southern portion of the basin, especially if the well fails to prove the effectiveness of a mature source rock. So we'll move ahead now to Mopani 2X. So we couldn't present our key wells to watch without having something in the Orange Basin, which has been one of the most active and prolific exploration regions since the basin opened in 2022 with the Venus and Graff discoveries. And as mentioned, we could see 9 high-impact wells drilled in the basin this year. And we've decided to highlight Galp's Mopani 2X well as our key well to watch. So for a bit of context, since the basin was opened, we've already seen potentially commercial follow-on discoveries at Yonker and Mangeti, which was just recently reported. And these are both in the Lower Cretaceous play that was opened by Venus. And they all sit outboard of the SDR high. The Upper Cretaceous play that was opened by Graff has also had a follow-on discovery at Lesedi, but based on announcements by the JV, at the moment it appears non-commercial. It's worth noting that all of the discoveries I mentioned so far have also been made by the Total Energies and Shell-led JVs in PEL 56 and PEL 39. So Galp operates PEL 83, which is just north of Shell's license, and it also overlies the SDR high, which you can see on the map, highlighted by the pink crosshatch blob there. And this is important, as Shell has previously highlighted the SDR high as providing a regional focus for hydrocarbons, enabling for stacked reservoirs not directly coupled with the source rock. So Galp's in the midst of a 2-well program, with both wells targeting what Galp refers to as the Mopani complex. So its first well, Mopani 1X, completed in mid-February and is reported to have made discoveries in 2 intervals, both containing significant oil columns in sandstone reservoirs described as high quality. Galp has also said that the discovery looks sizable and has very encouraging pressures, porosities, and permeabilities. NAMCOR have reported the age of the upper interval to be Cenomanian-Turonian, which differs from the discovery intervals in Graff, which are Santonian and Carnation. And the age of the deeper interval has not been reported yet. Galp has said that the well went all the way down to the source rock, so it's possible that this deeper interval is a deeper upper Cretaceous interval or possibly a lower Cretaceous Apto-Albian interval. Galp has also referred to the deeper interval as the AVO2, suggesting that the discovery was identified using some sort of AVO anomaly. It's worth noting that Shell also reported the deeper discovery interval in Graff to be DHI-led. So Galp's second well, Mopani 2X, is currently being drilled about 7.5 kilometers west of Mopani 1X and is reported to be targeting the same intervals. Galp has said that Mopani 2X will evaluate the extent of the discoveries, which makes it sound a lot like an appraisal well. However, it's worth noting that Mopani 2X was actually top-holed prior to the spudding of Mopani 1X, suggesting it to primarily be an exploration well. However, it may still have some appraisal objectives. It's possible that Mopani 2X may be targeting additional AVO anomalies within the greater Mopani complex, which indirect partner Santana Energy has reported could contain a JV estimate mean oil in place of up to 10 billion barrels. So reservoir quality and deliverability appeared to be the primary risks for both the upper and lower Cretaceous plays in the basin. There have been rumors that the sands in Venus are very fine-grained, and we've seen a reservoir failure in the dry Nara well, and also an unsuccessful flow test in Venus 1A. And Total has recently been highlighting the importance of identifying sweet spots within the fairway. In the Graff discovery, the deeper Carnation interval required a small frac before the interval was flow tested, and Shell has also demonstrated some reservoir variability within the Santonian intervals between Graff and Lesedi. So reservoir quality is likely the key risk for Mopani 2X. However, the reports of high-quality sands and encouraging porosities and permeabilities in Mopani 1X does de-risk the well to some extent. So Mopani 1X is an important discovery for the Orange Basin, and Mopani 2X is clearly going to be a key well to watch. Mopani is the first potentially commercial discovery in the basin made by a company outside of the Total Energies and Shell-led JVs. It extends the upper Cretaceous play north by about 100 kilometers north of the Graff discovery, and it's also proved up additional stratigraphy within the upper Cretaceous play, suggesting that a very large or multiple widespread depositional systems might have been present at the time. It also reaffirms the Ester High as a regional focus for hydrocarbons, which should encourage further exploration along the Ester High along the margin. And we'll now move on to North America. Thank you.
Thanks, Brian. So I'm going to be talking through a couple of wells in North America, but we'll start with a quick overview of the region. So just as a reminder, please do post any questions you may have on any of the wells that we're talking about today, or any of the other wells that you're aware of coming up in 2024, and we'll try and get back to you either in the chat box or answered live at the end. So in North America, last year we saw drilling almost double from 10 wells in 2022 to 19 in 2023. But this was really driven by the drill out of the remaining IOC commitment wells in Mexico. And we are expecting to see a slight drop back down as we go into 2024, with about 14 wells completing by the end of the year. If we look at the maps on the right-hand side, we'll see 3 high-impact wells being drilled in Alaska, testing a potential eastern extension of the Brookian Upper Cretaceous play. In Canada, we had BP's Ephesus failure last year in the Orphan Basin, and this year we'll see Exxon testing the basin with the Persephone well that we'll cover in a bit more detail in a few slides' time. In the GOM, on the Mexico side, we saw a pretty disappointing year in 2023 with 10 high-impact failures. And this year, we're just expecting to see 3 IOC high-impact wells being drilled, all in the shallow water of the Campeche. And this includes Total's Oshkan well, which we'll cover in a bit more detail. And finally, on the US side, we've already seen a couple of high-impact failures at Ozo and Molarusa in 2024, and we'll be seeing a few more really interesting tests of the Miocene play with play extension attempts at Daenerys and Corvus. So starting with Corvus in the Gulf of Mexico, this is really the well to watch this year in the GOM. So it's currently being drilled by Chevron in Atwater Valley. The license was awarded to Chevron back in March 2020 for an uncontested $2.5 million bid, and it picked up the 3 surrounding blocks for about another $2.3 million over the March 2020 and subsequent license rounds. And then Woodside have farmed in, taking 30% across the whole cluster just back in September last year. So this block had been held by a long list of companies since the late 1980s, including Shell, BP, BHP, and actually Petrobras as recently as 2015, but it hasn't been drilled. The closest previous well to Corvus was drilled by BP back in 2014, targeting the Miocene play, coming in dry, and this was at the Bright well. So the play being targeted at Corvus is lower to middle Miocene sandstones in a 4-way dip closure, and it looks to be an extension of the Mad Dog, Atlantis, and Neptune discoveries that were made in the Western Atwater fold belt in the late 1990s. And just to note, Corvus is about 50 kilometers away from the Neptune discovery. So the key risks at Corvus look to be timing and migration. The Neptune field has variable oil quality ranging from 26 to 8 degrees API, and the source rock in the Corvus area is expected to be slightly cooler than Neptune, and it could lead to more immature fluids and therefore a risk on the fluid quality. So nothing's been presented in terms of scale for Corvus, but the prospect is assumed to be multi-100 million barrels, and it would represent a significant play extension for this Miocene play. So the area around Corvus wasn't really a focus for the December lease sale last year, but Chevron did have a big acreage push back in March 2023, being awarded 21 different blocks across 4 different clusters in this more central to outer area of Atwater Valley. So these are located about 20 to 80 kilometers away from Corvus and outside of the salt canopy, but they could be de-risked should Corvus identify good quality sands and potentially good quality oil being present. So this is definitely one of the key wells to watch in the GOM this year. So we're going to stick with the Gulf of Mexico, but now move to talk about the Mexican side, focusing on the Campeche shallow water. So in previous years, we've covered the IOC campaigns in the Campeche, which have really been focused on mature clastic plays in the shallow water, and then the industry's attempts to extend these out into deep water, as well as a handful of frontier play tests being drilled in the deep water as well. And we're nearly at the end of this IOC drill out, and it's fair to say that the overall results have been largely underwhelming, with just a small number of companies having any success in already proven tertiary clastic plays. But today we're going to look at something completely different. So Total will be drilling the Oshkan well in Block 15, and this is located to the east of the Reformer Akal trend that hosts the giant Cantarell complex. So this block was awarded to Total and Shell in 2017, and it didn't actually have an exploration well committed. So this is a very rare optional well being drilled by an IOC in Mexico. Qatar Energy farmed into the license in 2020, but Shell actually exited the license later that year, and the Taiwanese NOC just farmed in 2023. So this well is only in 20 meters water depth and is targeting an 800 MMBOE prospect, according to the regulator. So the primary targets are brecciated carbonates of lower tertiary to upper Cretaceous age, charged from a postulated Tithonian source rock. And the key risks here really relate to reservoir quality and phase. So it might be surprising that we're highlighting reservoir quality with such prolific reservoirs located nearby, but actually the brecciated carbonate play is unproven in this offshore extension of the Macuspana subbasin, with the reservoirs either being shallow or tertiary clastics or debris flows with secondary enhanced porosity, rather than the carbonates that are thought to be fractured carbonates at Oshkan. In terms of phase, the majority of the fields on the onshore area of this subbasin are gas. So it's a tertiary salt withdrawal basin with a gas-prone source rock, and the presence of a deeper oil-prone source rock here really is a key risk. So obviously finding 800 million barrels in shallow water and this close to shore in a block that's actually already been drilled 5 times would be a really impressive result, and it could leave Pemex scratching their heads wondering how they missed it. And success would also de-risk some other prospectivity on the block as well. If the well fails, and Total also has no success at Book's Peak, which it's drilling at the moment on the other side of the Reformer Akal trend, this could lead Total to exiting Mexico, as we've seen recently with Exxon, Chevron, BP, and Equinor. So finally, for North America, we're going to move to look at Persephone in the Orphan Basin offshore Canada. So as Andrew mentioned at the start, the Orphan Basin was really a key area for 2023 with BP's Frontier Ephesus well, which targeted a multi-billion barrel Eocene fan complex and came in dry. So today we're going to look at a completely different play, with Persephone understood to be targeting Upper Jurassic shallow marine sandstones in a structural trap, rather than the Eocene play that was targeted at Ephesus. So the block was awarded to Exxon and Qatar just as recently as November 2022 with a $140 million US dollar work program bid. And it's in the remote, almost unexplored area of this Eastern Orphan Basin, and it's outside of the 200 nautical mile boundary. So no pre-drill estimates have been presented, but we're assuming that the prospect's probably at least 1 billion BOE in scale. But in terms of risk, we should note that the commercial success rate for wells in frontier basins has been about 5% over the past 15 years. So this is really highlighting how high risk frontier basin exploration is. So 12 unsuccessful wells have been drilled in the Orphan Basin to date, with the primary focus being on large Mesozoic structural traps. And the closest wells have been this Great Barrowsway, Marjorie, Lona, and Cupids. And all of these actually encountered some good quality Upper Jurassic reservoirs. So despite some of these wells also having shows, the common failure reason across the basin appears to be source effectiveness and charge access. And as well as this risk, there's also some risk on reservoir as well, with the sands being encountered so far being of variable quality. And what's quite interesting here is that Exxon's usual exploration strategy includes taking large acreage positions covering the majority of any potential play. So recent examples would be the Starbrook license in Guyana, and we've just seen Brian talking about Exxon's multiple licenses covering the Namib Basin. But this license is the only acreage held by the JV in the Orphan Basin, which could suggest that the prospect may be very large, but it could be a one-off with limited follow-up potential. So should the well fail, and again point to a basin level issue relating to charge, we'd expect to see further exits following the recent relinquishments that we've seen from BP's and Navitas in the north following the Ephesus well, and we saw Woodside exit a couple of licenses a couple of years ago as well. And now I'm going to pass on to Steve to talk about Northwest Europe.
Thank you, Jamie. I'll be focusing on the UK and Norway in Northwest Europe. And as you can see in the chart on the left, there is a continuing decline in high impact drilling in the region, especially after the highs of 2019. This declining trend is related to increasingly mature basins in the UK and Norwegian continental shelves, where companies are moving towards ILX-focused strategies. Of the planned wells for the year, there are currently 2 firm wells and 2 probable wells. Looking at the chart on the right, the decline in high impact drilling has been has had a corresponding impact on high impact discovered resources, with 2023 being an exceptional year, discovering approximately 175 million barrels of oil equivalent in 2 high impact discoveries, with appraisal drilling required. Risked pre-drill resources for 2024 are approximately 95 million barrels. 2024 will see a renewed interest in drilling in Norway's Barents Sea, with 2 high-impact wells forecast at Venus and Elgol. No high-impact wells were drilled in the Barents Sea in 2022 or 2023, and this is the first time no such drilling has occurred in that basin since 2008. So now focusing on the Venus well in the next slide. This is the first well to be drilled in the PL 1025S license. The prospect is in the sparsely drilled southwestern Barents Sea in the Boyne-Neuer Basin, west of the Boyne-Norrena fault complex. The license was originally awarded in the APA 2018 license round, and the current JV consists of Vår Energy, which is the operator, on 60%, Equinor on 20%, and Petoro on 20%. The Venus well is planned for Q1 2024 at the earliest, and Vår Energy has quoted pre-drill unrisked resources of 353 million barrels. Westwood has assigned a 10% chance of commercial success based on the play being frontier. However, the overall commercial success rate in the Barents Sea since 2014 is 7%. Venus is an ILX well located approximately 30 kilometers northwest of the Johan Castberg hub, drilling in 400 meters water depth. The Johan Castberg field is currently under development, comprising 3 separate discoveries drilled between 2011 and 2014, with reserves of 550 million barrels. First oil is anticipated in 2024. The Venus well is targeting a new play in the Paleocene Torsk Formation, interpreted as deep marine turbidite sandstones deposited in submarine channel complexes in a combination structural stratigraphic trap. The Venus well has a prognosis for 2 reservoirs in the Torsk Formation, the first at 1,458 meters measured depth and with a thickness of 25 meters, and the second at 1,583 meters measured depth and with a thickness of 35 meters. No oil has been proven in tertiary reservoirs in the Barents Sea to date, although several non-commercial gas discoveries have been made in Paleocene reservoirs. Several wells have targeted the Paleocene Torsk Formation play in the Barents Sea, even though it lies outside of the NOD's mapped Paleogene play fairway. And these include Statoil's Pingbin well, drilled in 2014, which was a non-commercial gas discovery, and Lundin's Basque well, drilled in 2021, which encountered 90 meters of gross sandstones, but failed due to trap integrity and mainly poor reservoir quality, and was P&A oil and gas shows. With no discoveries made to date, the Paleocene is considered a frontier play in the basin. Key risks for this prospect are trap integrity, reservoir presence, and phase, with Vår Energy having stated a 50% chance of resources being oil or gas. So a small scale oil discovery could be tied back to the Johan Castberg FPSO hub, while a gas discovery in line with Vår Energy's 353 million barrels of oil equivalent pre-drill estimate could be a catalyst for a much-needed gas hub in the Barents Sea and could lead to additional exploration in the area. I will now hand over to Jamie Higdon, who will cover Southeast Asia.
Thank you very much, Steve. Right, so we'll just move on to the last region of the presentation and look at Asia Pacific. And high impact drilling here over the next year is set to remain stable compared to the last 5 years or so. We should see 10 firm wells complete in the year. 5 wells have actually already been completed, including 3 offshore deep water Eastern India basins. So ONGC have made 2 gas discoveries in the deep water Mahanadi Basin in the late Miocene Pliocene play, whilst the Reliance BP UDW-1 late Miocene test in the Krishna Godavari Basin was confirmed as a dry hole earlier the year. Pekaka, which is the Shell-operated well in ultra-deep water Sabah Trough, Malaysia, completed on Saturday, so we don't have any results reported for that yet. That well was attempting to open up a Oligomycene carbonate build-up play commercially in the Sabah Trough, and that follows 3 previous wells in the play which have yielded technical discoveries. High-impact wells currently drilling include Gayo in the North Sumatra Basin, which we'll look at in more detail in a minute, and Basset Deep, which is an Impex well near the Ichthys development in the Browse Basin. Little else in the region is actually firm in terms of signed rig contracts for the coming year. There are lots of possible wells, including Oil India and ONGC, who are wanting to drill multiple tests offshore of the Andaman Islands, but timing's very uncertain on these. Eni may drill a well in the frontier Phu Can Basin in Block 124 in Vietnam, and also an additional exploration well in the distal Kutai Basin in Indonesia, which is close to last year's Geng North discovery. Murphy planned to drill a large Oligocene clastic oil prospect in the mature Kulong Basin of Vietnam, close to the recently sanctioned Lac Da Vang development there. And Empyrean Energy are aiming to test a large Miocene carbonate build-up play in the Pearl River Mouth Basin, which is following a dry hole that was drilled by the company in 2022. And if we zoom into the North Sumatra Basin, the deep water North Sumatra Basin offshore Indonesia, and just have a quick recap and look at activity this year. So the play opening well here was the Timpan gas condensate discovery made by the Harbour Energy JV in 2022. And that discovered approximately 200 million barrels equivalent, or 1.2 TCF equivalent of resource in a late Oligocene Sinrift sandstone play called the Bampo Formation. And the reservoir at Timpan is described as good quality sand, likely in a deep marine depositional setting, high net to gross, with the only question marks over deliverability associated with low permeability and poor filling chlorite in the reservoir. The second well to test the play was Layaran, which is in the neighbouring Mubadala-operated South Andaman licence. And this also completed as a significant gas discovery late last year, and possibly discovering a greater resource than at Timpan with a larger gas column and closure area, but in a much more complex faulted structure that could be compartmentalised. And this year, there's a 2-well follow-on campaign ongoing in the Harbour-operated Andaman 2 licence, so testing 2 further Bampo sandstone targets. These targets have a distinctive flat spot anomaly, which is common to this play inventory over these blocks. Howler 1, which is on the bottom cross section, is up dip from the Timpan discovery. That's aimed to de-risk a possible cluster of discoveries around Timpan. But it displays a significant gas chimney, and so there's a potential of trap reach on that particular prospect. And actually, this well completed in under 25 drilling days in January. We don't have any results reported yet. It's understood to have reached TD, but we await further details on that one. And the second well, Gaio, which is on the top cross section on the left-hand side there, that's currently drilling and is looking to open up a second cluster of prospects in the southern part of Harbour's license. It's a faulted closure, but it's shallower below mudline compared to Timpan, so perhaps with a chance of better permeability at target depth there. And in common with many of these prospects, it's on the order of 1 TCF in scale. So, you know, these are all expected to be, if they come in, clustered into cluster developments. And after 2 discoveries from the first 2 wells at Timpan and Laiaran, certainly in the press there are the inevitable reports of the drill out of this play with the flat spot anomaly akin to shooting fish in a barrel. And so the results at Howler and Gaio are going to be key to determining the play's ultimate regional prospectivity in the basin, and the likelihood for which or any potential developments are going to be successful. Further activity this year, we should see another test for Mubadala in the South Andaman license on another prospect, potentially at Parang, and also potentially an appraisal well at Laiaran as well. And the Indonesian regulator is set to announce the PSCs, which are available in the 2024 bid round, which is going to be imminent. And this will undoubtedly include areas in the basin here, which were recently relinquished by Repsol and ENI, and adjacent to the currently explored active licenses of Harbour and Mubadala operated JVs. And as the play in terms of running room beyond the currently active licenses, as the GDE map suggests, prospectivity of this Bampo Sound play in Indonesian waters might diminish further south and westward as you move further and further away from the good quality regional sand provenance, which is coming from Peninsular Thailand. So that's certainly an area that we're going to be keeping an eye on. And I'll pass back over to finish the webinar with the Q&A if there's time.